futures market like a 24-hour convenience store. They think because the market is open, they should be trading. They sit at their screens at random times, forcing trades in low liquidity, getting chopped up by algorithms, and wondering why their technical analysis isn't working. Here's the secret the pros know. Time is an indicator. The market isn't a continuous flow. It is a scripted 3-act play repeated every single day. Act 1 is the setup. Act 2 is the trap. Act 3 is the move. If you don't know which act you are in, you aren't the audience. You are the prop. I'm going to show you how to stop staring at charts for 12 hours a day. I'm going to teach you how to watch the first 2 sessions set the trap so you can walk into the New York session and take the money. My name is Dilkhan, and I spend way too much time analyzing market timing and session liquidity. If you're someone who is tired of overtrading and getting wrecked by choppy markets, make sure to hit the subscribe button. Today, we are breaking down the session cycle. I'm going to show you why Asia accumulates, London manipulates, and New York distributes, and how to trade that exact pattern for high-probability setups. Let's kill the biggest myth in trading. The market is open 24/5. Technically, yes. Practically, no. Volume is oxygen. Without volume, price doesn't move efficiently. It drifts, it spikes randomly, it hunts stop losses. 80% of the daily volume happens in specific 4-hour windows. If you are trading the dead zones, like the late US afternoon or the pre-Tokyo lull, you are literally gambling against high-frequency bots that are programmed to chop you up. We are going to treat the market not as one day, but as a relay race between 3 global financial hubs. The Asia session. It starts with Asia, Tokyo, Sydney, Hong Kong. For most traders, especially if you trade gold, Euro USD, or GBP USD, Asia is not for trading. Asia is for observation. During this time, the big banks are offline. Volatility is low. Price usually moves sideways in a tight range. We call this the Asian range. Here is your job. Do nothing. Just mark the high and the low of this box. Why? Because this box is building liquidity. Above the box, impatient sellers have their stop losses. Below the box, impatient buyers have their stop losses. The Asian session is effectively building the fuel for the rest of the day. The London session. Europe wakes up. Frankfurt opens, then London. This is where the volume kicks in, and this is where the fake-out happens. We often see a move called the Judas Swing. Price will suddenly break out of the Asian range. Let's say it breaks to the downside. Retail traders see this and scream, "Breakout, the trend is down, sell." Wrong. The institutions are using that move to sweep the stop losses below the Asian range to gather liquidity. They are inducing you to sell low so they can buy from you. This is why I like to watch London but rarely trade it unless the setup is perfect. London's job is often to create the high or low of the day by trapping traders on the wrong side. New York session. Now the US wakes up, 8 a.m. to 11 a.m. EST. This is the New York kill zone. This is where we strike. Here is the setup you were waiting for. Asia built the range, the liquidity. London swept the low of that range, the manipulation. New York opens. If London swept the lows and then price started rejecting, New York will likely reverse and target the Asia highs. Why? Because that is where the remaining liquidity is. The New York session typically offers 2 things. A, the reversal, if London moved too far. B, the continuation, if London started a true trend. By waiting for New York, you have hindsight on your side. You can see exactly what Asia and London tried to do. You aren't guessing, you are reacting to the traps they already set. The strategy, a real-world example. Let's make this practical. Here is your trading plan for tomorrow. Step 1. When you wake up, draw a box around the price action from 7 p.m. to 2 a.m. EST, Asia. Step 2. Look at what happened between 2 a.m. and 7 a.m. EST, London. Did price break out? Did it grab liquidity and reverse back into the box? Step 3, at 8:30 a.m. EST, New York Open, look for an entry. If London swept the low and price is showing strength, you look for buys in New York. Your target is the Asia highs. It's simple geometry. The market moves from liquidity to liquidity. You are effectively letting the London traders be the sacrificial lambs so you can eat in New York. The sniper mindset. Trading is not about working hard, it's about working at the right time. If you master this cycle, you only need to look at the charts for 2 to 3 hours a day during the New York overlap. Stop trying to catch every move. Let Asia build the trap, let London spring the trap, and let New York pay you. If you want a full video on the ICT kill zones and the exact minute-by-minute timing I use, comment sniper below. Subscribe if you want to trade less and make more. I'll see you in the next one.